What if I tell you that not just one brokerage house but 4 different brokerage houses have a buy call on a stock with upside potential up to 54%? Stock name is Lemon Tree. ICICI Securities in its 23rd March 2023 report has given a buy call on Lemon Tree with a target of 132 rupee. Currently Lemon Tree is trading at around 85 rupee. That signifies 54% upside from current levels. Likewise, on 14 February, HDFC Security has given a buy call with a target of 108 rupee, signifying 26% upside. Then IDBI Capital has given a buy call with target of 110 rupee, signifying 28% upside. And Motilal Oswal has given a buy call with a target of 115 rupee, signifying 34% upside. The question is, why every brokerage house is bullish on Lemon Tree with such high targets? Hey everyone, my name is Sahil and this is my Personal Finance Academy. Over the last few years, there is one major trend gaining popularity and it is travel. Be it taking a break from hectic work life or break from hustle bustle of daily life, the trend for travel is growing at a fast rate. And when it comes to travel, majority of Indians look for good comfort and hospitality at affordable rates. And that's where in today's video, I want to cover the fundamentals of hotel chain Lemon Tree, where we will look at the business model of Lemon Tree along with its leadership, financials, key strength and risk, and its future growth prospect. The most interesting part is every brokerage house has given a buy call on Lemon Tree, so we'll try to understand the reason for it. But as usual, this video is only for educational purpose. Please do your own research before investing your money. Alright, let's get started. Lemon Tree started its journey in 2004 with first hotel having 49 rooms. Fast forward today, Lemon Tree is the largest mid-price hotel chain and third largest overall hotel chain in India with a total of 8,451 rooms across 88 hotels. So Lemon Tree has grown leaps and bounds in last 20 years. Basically, Lemon Tree operates in upscale segment and mid-price segment. Company has 7 brands including Aurika Hotels and Resort that caters to upscale segment. Then Lemon Tree Premier caters to upper mid-scale segment. Lemon Tree Hotel cater to mid-scale segment. Then they have a brand called Red Fox that caters to price-conscious economy segment. Then they have Keys Prima, Keys Select and Keys Light catering to upper mid-scale and economy segment that offers both comfort and convenience to both business and leisure travelers at affordable rates. Now traditionally, Lemon Tree had a strong presence in business segment across business hubs of Bangalore, Gurugram and Hyderabad, comprising around 40% of their hotels. But now, company is increasing its range of holidays and staycation properties to cater to the evolving needs of Indians. The image that you see on the screen represents Lemon Tree presence in all over the country, with blue color representing operating hotels, orange color representing upcoming hotels, and green representing operating and upcoming. The most interesting aspect of Lemon Tree is its business model that is asset light in nature. It means Lemon Tree does not own all the hotels. It operates in a mix of owned, leased, and managed, that is franchise model, where as of 31st December 22 out of 88 hotels and 8,451 rooms, Lemon Tree owned 33 hotels and 4,517 rooms. Then company leased 7 properties with 573 rooms and managed or franchised 48 hotels with 3,361 rooms. So it's a mix of owned, leased and franchised model. I was also looking at management of Lemon Tree and its chairman and MD is Mr. Patanjali Keswani. He's an IT Delhi graduate and PGDM from IIM Kolkata. Before Lemon Tree, he has worked with Tata Administrative Services, Taj Hotels and A.T. Kearney Limited. Then his president is Mr. Vikramjeet Singh, who is an Harvard Business School alumni, Shriram College of Commerce alumni and has postgraduate diploma in Hotel Management and Administration from Taj Group of Hotels. Overall, I looked at board of directors along with senior leadership, and company has a very experienced and competent leadership across the board. Now let us try to understand why brokerage houses are bullish on Lemon Tree. The biggest reason why brokerage houses are bullish on Lemon Tree lies in the near-term to mid-term growth prospects of the company. If you look at historical performance of company, Lemon Tree revenues have grown consistently from 290 crore in FY15 to 368 crore, then 412 crore, all the way to 669 crore in FY20. And then COVID badly impacted the hotel sector growth due to lockdown. So revenue fell down to 252 crore in FY21, but it has recovered sharply to 402 crore and now 472 crore in trailing 12 months, which is much higher than its pre-COVID level. Likewise, the operating margins also consistently increased from 51 crore to 100 crore, 117 crore, all the way to 241 crore. And then it fell down badly due to COVID. But then look at the sharp recovery in operating profits that stood at 321 crore in trailing 12 months. Even companies' EBITDA margins have shown consistent improvement from 18% to 27%, 28%, then 31%, 36, that fell down during COVID, but latest margins are 43%, which is fantastic. The reason why we have not considered net profit is A, company has a high debt to equity ratio of 2.5 that result in high interest payments every year that eats into its profit. And B, the tax rates are all over the place that does not show the right picture of net profit. As far as ROE and ROCE are concerned, Lemon Tree has ROE of -10% and ROCE of 1.2%. The reason for low ROE and ROCE is because Lemon Tree does not have last 4 quarters of consistent profit. It was in loss in last quarter of FY22 and hence after Q4 of FY23 its ROE and ROCE should improve. Moreover, you can't expect very high ROE and ROCE from Lemon Tree because currently it is an investment phase that will generate return in the future. So ROE and ROCE will be on the lower side. Now going forward, Lemon Tree has planned to open another 2,789 rooms across 34 hotels by FY25. That will take the total room count to 11,240 and total hotels to 122. So increase in total rooms will directly result in higher revenue and profits, and that's reason number 1 why every brokerage house has a buy call. Moreover, out of upcoming 34 hotels with 2,789 rooms, 32 hotels and 2,051 rooms will be under managed or franchise model, and only 2 hotels with 738 rooms will be owned by company, making it very asset light. Second, company's ARR, that is average room rate, has increased from pre-COVID levels of 4,600 rupee to current levels of 5,700, signifying nearly 24% jump in ARR. This average room rate is expected to continue to rise across hotel category. And third, company's occupancy rate has also increased after a sharp fall during COVID to current levels of 67.6%. Before COVID, this occupancy rate was around 75%. So when the occupancy rate would increase further, it would directly increase the revenue and profit of the company. Moreover, Lemon Tree is soon launching its largest hotel, Aurika at Mumbai Airport, with 669 rooms by October 23. Depending upon how quickly it scale up, this hotel can deliver an EBITDA between 100 to 140 crore in its first full year of establishing operation, with an assumption of average room rate of around 12,000 rupee and an occupancy rate of 60%. Within travel segment, increasing number of people are opting for leisure travel with very relaxed and peaceful environment rather than simply checking the tourist spots. Today, many people are booking hotels and resorts that are close to nature just to get a detox from city life. And post-COVID, there's a new trend of staycation and work from anywhere, where more and more people are staying across the country at unexplored places. And that's where affordable hotel chains like Lemon Tree, that provides both luxury and comfort at decent rates, have a very good growth prospects. If you look at promoter shareholding pattern, promoters have reduced their stake in the company consistently, which is not a good sign. And their shareholding is also on lower side. Although the positive side is that both FIs and DIs are holding significant stake in Lemon Tree. In fact, FIs have consistently added stake from 20.1% in September 21 to 26.8% in December 22. Although DIs have reduced their stake in the same period. Public holding in the company is also on higher side, but within that, just 2 companies have 19% stake. One of them is RJ Corp, which is the parent company of Varun Beverage and Devyani International. So RJ Corp holding in Lemon Tree is also a positive sign. Now it is very important to understand the key risk before investing your money. So first risk is highly capital intensive business model. Hotel sector is highly capital intensive model, and that is clearly visible from Lemon Tree balance sheet that has a debt to equity of 2.5, which is certainly on higher side. However, now company is focusing more towards managed and franchise model in their upcoming projects and trying to reduce the debt in the near future. But historically, companies with high debt levels have struggled to create wealth. So before you invest your money, keep that risk in mind. Then second risk is competition. Leading listed players in hotel segment of India include Indian Hotel, which is the parent company of Taj Group. Although it only caters to premium segment, so it is not a direct competitor to Lemon Tree that is more focused towards mid-premium segment. Likewise, you have chain of Marriott, ITC, etc., but they all cater to premium segment. However, there is a growing competition from foreign players like Airbnb that has disrupted the hospitality industry. I won't compare Lemon Tree with Oyo because Oyo caters more towards value for money segment. But I find Airbnb as one of the biggest competitor to Lemon Tree. Moreover, hotel marketplaces like Make My Trip, Yatra, GoIbibo provides a platform to thousands of unorganized players in the country to list their hotels, and they pose direct competition to Lemon Tree. Finally, as far as valuation is concerned, we can't look at PE ratio as Lemon Tree has not completed 4 consistent quarters of profitability, and there is a lot of investment in current phase that will generate profit in the near term. So current PE ratio of 139 won't give a right picture. In terms of price to sale, Lemon Tree has price to sale of 8.5, which is slightly lower than Indian Hotels' price to sale of 9.3. Currently, Lemon Tree commands a market cap of 6,300 crore, so it's a small cap company. Overall, if we conclude, Lemon Tree is the third largest hotel chain of India with currently 8,451 rooms and has planned to add another 2,789 rooms by FY25. Company caters to upscale and mid-premium segment with a mix of owned, leased and franchise model that keep it asset light. Company has a very strong leadership, and considering the growing trend for leisure travel, Lemon Tree is well positioned for growth. And that is the reason every brokerage house is bullish on Lemon Tree. Although currently company has a high debt to equity of 2.5 due to its capital intensive model, and it is also eating into its profit. That is the reason around 73% of upcoming projects are under managed or franchise model, so that going forward it can control its cost along with managing the growth. So going forward, debt would be a crucial factor to decide the profitability of the company. I hope you get both the positives and negatives of Lemon Tree. Now tell me, what do you think about Lemon Tree? If you find this analysis useful, do consider subscribing to the channel and let me know if you want me to cover any of the stock fundamental analysis. I'll see you in next video. Till then, take care.